Higher supply chain security through Know Your Customer programs. Part 1. Customer is king is an age-old business mantra, highlighting the importance of customers in every business. Sales managers need to know their customers well, like which products or services the customer needs. Where is the customer located for the deliveries? How reliable is the customer when it comes to making payments on time? And so forth. One could state that knowing your customers in good detail is a must for any successful business. In some industries and business sectors, one needs to know a set of additional information about the trustworthiness and integrity of your customers, in the somewhat unpleasant context of: what if my customer does bad things with my products or services? For example, smuggling or acts of terrorism. Should I refuse to sell my products or services to a high-risk customer, meaning that I would lose some revenues and profits? Do you face such risks in your industry or business sector? Before we take a closer look on a couple of sectors facing such issues, let's first check two common concepts and definitions, as Wikipedia puts them. Due diligence is the broader scheme of investigation or exercise of care that a reasonable business or person is expected to take before entering into an agreement or contract with another party. Know your customer is the process of a business verifying the identity of its clients and assessing their suitability, along with the potential risks of illegal intentions towards the business relationship. Due diligence techniques are commonly used in the Know Your Customer (KYC) programs, and KYC is the focal scheme for this video. In the context of the finance sector, the KYC regulations, mandatory by nature, require banks and financial institutions to verify the identities of their clients and assess any potential risks of forming a business relationship with them. The goal being to prevent banks from being used, intentionally or not, for money laundering and other illegal activities. The KYC procedure is to be completed by the banks while opening accounts and also periodically update the same. Are you applying the finance sector KYC principles and measures in your business? Or have you been subject to such assessments? In the context of international trade, several categories of goods are subject to knowing your customers well. Next to their civilian purposes, some high-technology products may have military applications. Therefore, they are tagged as dual-use goods. Your government does not want that such products end up in the wrong hands. Parallel to this, the export control schemes can regulate and restrict the release of critical technologies, information, and services to foreign countries for reasons of foreign policy and national security. Is your company subject to dual-use goods or export control regulations? Government agencies and some international organizations may publish lists of entities and companies that are denied or restricted from doing business with. In case your prospective customer appears on one of the denied or restricted party lists applicable in your country, you need to either carry out additional due diligence activities or, in the worst case, refuse doing business with that customer. Such rules might be focused on specific sensitive commodities, or they might apply across all types of products. Have you ever tried a software tool to do screening on denied and restricted parties? And if you have, were any of your customers on such a list? Depending on the degree of regulation specific to individual business sectors, one could claim that some industries have built-in Know Your Customer programs in place, without calling them by the KYC name. The pharmaceutical sector is an obvious example, where particularly the wholesale and distribution actors and operators know very well their regular pharmacy and hospital pharmacy customers. And for the pharma products which require a doctor's prescription, also the pharmacies have kind of a KYC program in place. Could we learn anything from the way the pharmaceutical sector ensures trust and integrity in their end-to-end supply chains and apply that in our own business sectors? One approach to organize and administer voluntary KYC programs is to do it via trade and industry associations, where key suppliers from a specific industry come together and agree on principles and practices for an industry-wide KYC program. This has been done, for example, within GAMA, the Global Acetate Manufacturers Association, which represents the major cellulose acetate manufacturers, including the manufacturers of acetate tow, a raw material used in manufacturing cigarette filters. The primary goal of the GAMA KYC program was to reduce the risk of filter materials ending up in illicit cigarette production and trade. GAMA was dissolved in 2017, so the program is no longer running there. Are you aware of trade association-driven KYC initiatives in your business sector? As the last item in the Part 1 of the Higher Supply Chain Security Through Know Your Customer Programs video, we scratch the surface of KYC programs in the chemical sector by quoting the Australian 2008 Voluntary National Code of Practice for Chemicals of Security Concern document. Good security processes include conducting a close assessment of sales of chemicals of security concern and establishing the honest intentions of customers. A discussion with customers about the security arrangements and safe storage of purchased chemicals will also contribute to the security of chemicals. Work with supply chain partners to share safety and security advice, expertise, resources, and to foster awareness of chemical security. In order to protect your brand and reputation in general, and to protect your company against civil or criminal legal actions, be prepared on case-by-case basis to refuse to sell your products to a high-risk customer, even when it means losing some revenues.